Hi everybody, welcome back to my channel. In today's video, I'm going to be going over a short summary of the 2022 tax changes, okay, which is the tax returns we're filing now for 2023 tax season. As a matter of fact, that brings me to my first topic, which is tax season versus tax year, okay? So you're going to see me looking down at my notes. Okay, now, when we say 2023 tax season, that's the tax season because that's the year we're filing taxes. But the tax year that we're filing is for tax year 2022, what took place last year. Okay, so that was the first thing I wanted to mention. Now, the next thing, first, let me also say that if you're new here, please be sure to subscribe. My name is Tasha. My channel is called Entrepreneur Help Desk, and I post about all things considering taxes and entrepreneurship. Okay, so please be sure to subscribe. And if you're already one of my subscribers, welcome back. Now, the next topic that I want to mention, or the main point. Okay. Oops. Okay, give me a second, guys. Okay, I clicked a little bit too far. Sorry, I do not edit videos. Mistakes are mistakes. Okay, so now the next thing I want to mention is there has been a filing status name change for qualifying widower. Okay, so instead of the old filing status was called qualifying widower. Well, now that same status has been changed to qualifying surviving spouse. Okay, so that's one thing. Okay, why do I keep clicking so far back? Oh boy. Okay, sorry guys. Okay, and now, all right, now standard deductions have been increased. Okay. And I'm gonna get into in a minute, I'm gonna get into what standard deductions versus itemizing is all about. But the standard deduction for single people or married filing separate has been increased to $12,950, and married filing joint has been increased to $25,900. The head of household standard deduction has increased to $19,400. Okay, now what I want to mention in terms of, because for years a lot of people have gotten this confused. Okay, what the standard deduction is, the IRS off the top allows you to deduct from your income this amount. Okay, a standard deduction. But in previous years, or for many years, a lot of people were able to itemize, and some people still are, but a lot of people were able to itemize because in a year, based off of the categories, they actually spent more than the standard, okay? So for a situation like that, especially when it comes to saving on taxes, you would want to take the itemized deductions versus the standard, okay? But each time they keep raising the standard deduction, excuse me guys, okay, each time they keep raising the standard deduction, that in turn makes you less ineligible to take the itemized. Well, I'm using the word ineligible, but it's just whichever one is going to save you the most money. Okay, and they had did a lot of cuts with itemizing, but here's the short list of what itemizing deductions are. It includes your medical expenses, and again, there's a certain percentage there based off of your AGI. And then it's your state and local taxes, which they had did cuts with that as well. Your mortgage interest deduction, charitable donations, and other miscellaneous deductions, okay? Now, if all of those things that I named that are qualified are less than the standard deduction, then people are gonna take the standard deduction. But if it's more, then you use itemized. But yeah, honestly guys, most people take standard nowadays and itemized because that's just the way it's been working with all these changes they made. Okay, now the next thing that I want to mention is credits for the sick and family leave for self-employed individuals are no longer available, okay? I know they were doing that. They were allowing certain sick and family leave credits for self-employed individuals during the pandemic and things like that, but that has not been extended for the 2022 tax year, and they most likely will not be bringing it back. And at the moment, since we're on the topic of self-employed individuals, I just want to quickly mention that if you were hearing about this whole $600 1099K situation with third-party payments a few months ago, the IRS has actually delayed that. Okay, so anyone who receives payments on PayPal, Venmo, Cash App, and things like that, and it was more than 600, the IRS had previously been talking about issuing Form 1099K, okay, which a lot of you are probably already familiar with anyway, because if you were hitting certain targets, excuse me, if you were hitting certain targets and thresholds, you were already getting the 1099K, and that still is the case. But they were going to reduce it to any business who was receiving $600 or more, and they were just doing too much, so they decided to postpone it, and now it's going to be in effect for this current 2023 tax year. But do not get it twisted. Just because they're not going to be issuing the 1099K for lower amounts that you earn on those third-party payments, you still have to report it, okay? Now, let me get to my next slide. Okay, credit for child and dependent care. Okay, this credit has actually, now they had increased it. Well, they did a significant, last year, they really allowed a significant amount more than they ever have. Okay, but now they actually brought it back down to the regular amount, and I'll go over that in a minute. But I want to mention that this is considered a non-refundable credit, and what that means is that it cannot increase your refund nor create a tax refund if you're not owed one to begin with. Let me give you an example. Okay, let's say you owe a balance of $200, right, in taxes or whatever, and due to the child and dependent care credit, you're actually eligible for like $300 of that credit. Okay, now it can wipe out the $200 that you owed in tax, but you see there's still a remaining $100 left. Okay, but it's non-refundable, so it doesn't still get issued to you, if you follow what I'm saying. Okay, so I wanted to mention that. Now, here's the dollar limit for qualifying expenses. So for those of you who claimed child and dependent care last year, you may recall that they were allowing up to, I believe it was $8,000 or something like that for one qualifying child. Well, now the qualifying expenses have been brought back down to $3,000, and then if it's two or more, $6,000. Now there is a maximum credit allowed, which is 35% of your employment-related expenses. Okay, so keep all of that in mind. Let me also talk about the child tax credit, okay? And I know they were doing advances and things like that. None of that is happening now. Okay, so you're going to receive $2,000 for each qualifying child if you're eligible. And additional child tax credit has been increased to $1,500 for each qualifying child. Okay, now that amount can begin to phase out if your adjusted gross income reaches $200K, all right, or if you're married filing joint, $400K. And that whole adjusted gross income, which we call AGI, is super important for you to learn how to read on your tax return. And in a previous video, which I need to do an update, I showed people how to read their 1040, because it's really important that you understand these line items, and your AGI is often asked in multiple scenarios, okay, for multiple purposes. So it's really important to learn, and I may do, if you guys wanted another video on how to read your 1040, please be sure to comment. And if you like this video so far, please be sure to like this video so YouTube can push it out to more people who are looking for this content. Now, another thing I want to mention is there's going to be delayed refunds for some taxpayers, and that pertains to people who are receiving additional child tax credit or earned income credit. Okay, first of all, if you're filing early, okay, which by the way, IRS is scheduled to open January 23rd is when they're going to begin accepting electronically filed tax returns. But so if you're going to be filing early or whatever, that's fine, but they're not going to begin releasing those refunds to these targeted people until mid-February. Okay, and then even after that, once that passes, and you still fall in this range of an additional child tax credit receiver or earned income credit, the normal processing time, you're probably still going to have an additional 2 weeks added to your processing time. because they need to go and make sure that you qualify and everything like that. And as a matter of fact, if you want to get an estimated date of when you may receive your refund, I'll put a link in my description box, because I recently posted a blog post with estimated refund dates, okay, based on when you submit. Okay, now, speaking of earned income credit, for taxpayers without children, okay, this is what the law is for 2022. You must be at least 25, but under age 65, okay? And that also applies for married filing joint. Okay, and I want to say, yeah, okay. So that was actually my last slide, guys. And I believe I just did a summary. There were many more changes, but I didn't really want to go into all of them, okay, at the moment. It was just doing too much, and I didn't really want to keep this video too long. Another video you should definitely check out that I recently posted was how to figure out how to calculate your tax bracket, okay, which is really important for tax planning, okay? And a lot of us have to become more, we have to begin to normalize tax planning, because tax planning involves what you do now, starting now for 2023, that's gonna help how your results are gonna end up next year when we file the 2023 tax return. So when you don't tax plan, okay, what happens is the year already passed, because we're here now, and anything you could have done for 2022 is pretty much a wrap, okay? There may be some little leeway there for to still contribute some money to retirement, depending on what type of account you have. I believe you have until April 16th to do that. But yeah, okay. So thank you for watching, and see you in the next video.